So many people are out here saying vacation rentals are dead, but Avery Carl built a short-term rental empire, and she's here to tell you exactly why that is wrong. In this interview, we break down the biggest myths about STRs, how to actually find deals in 2025, and why most hosts fail before they even start. If you've been thinking about investing in vacation rentals, this is an episode you don't want to miss. Let's get into it. Welcome back to the Bigger Stage channel. We have the legendary Avery Carl in the building today. And if you are new to STRs, she might not be familiar to you, but if you have even paid attention to this space for a couple days now, you probably have seen her as she's a titan in the industry here. Avery, please introduce yourself to the crowd and let them know a little bit about your experience.
Hey y'all, thanks for having me. Thanks for having me, Garrett. My name's Avery Carl. I'm a real estate investor first. I've got 200 something doors across the US, but the catalyst to being able to build that portfolio quickly, and my favorite, honestly, asset class is the short-term rental, or I like to say vacation rentals, to kind of separate, we buy beach houses and mountain houses in places that people would be staying in these types of things anyway. We're not going into your grandma's neighborhood in Indianapolis and making it unaffordable. So I like to make that distinction, but that's my favorite asset class. We were able to build, but we scaled from 1 to 5 short-term rentals pretty quickly over the course of about, 18 months. We've been investing in short-term rentals for 10 years, which makes me feel extremely old. Bought our first one in 2015. So well before COVID, we've been through all the ups and downs. And I also run the country's only short-term rental specific real estate brokerage or team at eXp Realty. We have helped over 5,000 investors buy and sell short-term rentals. So between all of that, I've seen a lot of things, hopefully able to bring some experience and value to your viewers today.
Absolutely. We definitely know you have the experience there, and even just wrote a book for Biggerpockets, your second one, called Smarter Short-Term Rentals, which we will highlight quite a bit as we go on. But what was your motivation in writing this book, and what are some new insights that you wanted to bring when doing this second go around?
So back when I wrote the first one, there really wasn't any short-term rental content out there. There was only long-term rentals, and that was really it, long-term and commercial. And so I back then I was getting on the Biggerpockets forums, these older men would be like, that's dumb. Why are you doing that? I remember one guy who had a lake house was like, I'm running a vacation rental, not an air bed and breakfast, and I will not use Airbnb. I will only use Vrbo. And, I just felt like it was an asset class that needed more attention because it is a real asset class, and they kind of acted like, we were like a bunch of stoners renting couches to each other. So, the vacation rental industry has been around for decades and decades, since well before Airbnb, before the internet. I think King Louis the something, I don't know which Louis, of France had the very first vacation rental. He had a hunting estate that he rented out when he was not using it himself. So it's a very established asset class, but only since Airbnb has come along in the past 10, 15 years has it really kind of been democratized and into something that you can actually make money with. Before Airbnb, you had to put everything with a local property manager in whatever town you were in for 40% of your gross. So it really is a really important asset class. You should have any real estate investing portfolio should have at least a few short-term rentals in it. So there just wasn't, I didn't feel like it was getting the attention or the respect I just still don't think they get the respect they deserve. But just wanted to kind of tell the world about this strategy that helped me, become a millionaire before 30. And it's just something that I think I just love vacation rentals. They're just the most fun type of real estate to buy too. Everybody wants to make real estate such an algebra equation, and short-term rentals are fun. It's a lot more fun to go buy a beach house than an apartment building in Baton Rouge.
And that's something I wanted to cover is there's a lot of misconceptions, I think, even in the past few years about short-term rental investing. Airbnb Bust was one of the most popular terms around. And what do you, when you hear these misconceptions, and you already alluded to it a little bit with vacations rentals have been around for forever, since even before Airbnb was a thing. What do you think when you hear some of these misconceptions around the short-term rental industry?
Yeah. So a number of things. First is the timing of short-term rentals really catching on coincided with COVID and the COVID travel boom and the 2% mortgages. So 50% of all real estate investments, short-term, long-term, or otherwise, are sold within the first 2 years because people buy them. They think, oh, this is going to be great. Then they realize like it's kind of work. It's kind of a pain in the you-know-what because things break and it's always at an inconvenient time. And they sell them. And same thing with short-term rentals are no different. And so what we saw was a lot of people buying properties that they should not have been buying because they were not treating them as the businesses that they are, because they are a business. As a matter of fact, I think they're like the perfect gateway drug into either being a real estate investor or buying businesses. Like if you want to go the Cody Sanchez route, because it not only teaches you how to invest in real estate, but it teaches you how to run a hospitality business. So anyway, I think a lot of people weren't treating them like the businesses that they were. Everybody was buying all kinds of real estate because the rates were at 2%. Like my Chihuahua could have gotten a loan back then. And so I think a lot of people went, oh man, I've always wanted to have a house in Nashville and the rates are only 2%. I can just throw it on Airbnb. That mortgage isn't going to be that much. And they didn't treat it like a business. Another piece of it too is, so if you're not a short-term rental investor, let's say like you have a stock portfolio. Every day when you open up your stock portfolio or however often when you sign into E-Trade or what have you, and you look at the last, let's say the 5-day, what's happened in the last 5 days. Well, we had that DeepSeek Chinese AI company come out and all the tech stocks went down. So if you're looking at the last 5 days, oh my God, it's a bust. But if you back that up and look at the last 5 years, well, all those tech stocks are several hundred times higher than they were 5 years ago. And the same thing has happened with the income of vacation rentals. So I've owned three of my doors since 2015. So well before COVID. So if you look at the income on those doors, yes, between 2020 or maybe between 2021 and 2024, our income went down. 2024, it actually bounced back up just a little bit. So if you only look at that 5-year period between 2020 and 2025, you're like, oh my God, it's a bust. But if you zoom out and look at 2015 to 2025, so to use some numbers here, I think the most, we've got a few 2-bedrooms that the most they ever made was like 85,000. And then they went kind of back down to like 75,000. Now they're at like 77,000. So it looks like, oh man, we had a big dip there. But if you zoom out, in 2015, we underwrote these properties to do $45,000 a year. That was what we were expecting to do. That's what we did, and we were happy to get. So we're still like at almost double what we were at when we bought 10 years ago in income. So when you zoom out like that, what looks like a bust when you're zoomed in too far is actually just a blip. So the income is trending upwards, but most people just haven't owned them long enough to really see that.
I tell people all the time, this is a marathon and not a sprint, especially in this kind of industry. And you can take a very quick approach and realize, think 1 month, oh, I lost $1,000 and, everything's, crumbling. And it's when you take a step back, you're like, well, actually the whole year, or in a few years, I've actually increased my revenue over the time. So I think that's a great point to put out there. And it also leads into my next question, because I think, besides your myriad of knowledge and things that you teach that are definitely very insightful, this is you have a very strong sense of what kind of markets do well out there. And you allude to it in your book about mega markets versus emerging markets and things like that. How do you determine these different markets, and where do you think the opportunity lies going forward, looking for, say somebody doesn't have a vacation rental at this point and they're curious about how they can enter, and they see rural properties that are very cheap and very affordable, but they might not have the data to support it being a strong market. And then you have our the more popular markets like mega markets that you talk about that are tried and true areas. So how do you identify these type of markets, and what advice would you have for people that are looking into new markets?
The number one most important thing to me is longevity and volume of tourism in that market. So for example, I live in Destin, Florida. I have several vacation rentals in Destin, Florida. 10 million people a year come visit Destin, Florida. There are 10,000 of us who live here. Our entire economy is dependent on tourism. We don't have many hotels, and it's been the normal thing for very nearly a century for people to come here and rent beach houses and condos. So my grandmother, who is 96 years old, has been coming here since the 30s and renting beach houses. So the tourism is not going to go away. That's not something, I've been coming here since I was a kid, my parents, my grandparents. So there's plenty of markets like this across the country where the tourism is very tried and true, volume is there. For me, I always want to fish in a pond of 10 million rather than fishing in a pond of 10,000. So I think a big mistake that a lot of short-term rental investors have made over the past 3 or 4 years is like trying to trailblaze and and I talk about that in the book a little bit of like, I'm going to buy where there's no short-term rentals. I'm going to be the first one. I'm going to go where there's no short-term rental host has gone before. And there's a reason at this point in this established of an asset class, if there's not a lot of short-term rentals in a market already, it's because there's not a lot of demand. And you can be successful if you know a market very, very well and you're one of a handful of properties, but it's a lot more difficult to be successful than in a mega market that has a ton of short-term rentals. And a lot of people are like, oh, I don't want all that competition. So for me, I prefer a mega market. Like I will never buy a short-term rental in Starkville, Mississippi, or any number of places, because I want to see the reason that markets get a lot of short-term rentals, the reason that markets get, quote, saturated is because the demand is there. It would not get saturated if a lot of people were not really successful. So I like those types of markets because it's very easy to plug your business in. There's a very robust infrastructure of cleaners, handymen, everybody that you need to be able to run your business. And I don't care if there's 10 rentals or 10,000 rentals. It's not that difficult. You're really never competing with the entire market. First, you're only competing with the other bedroom counts, with the same bedroom count that you have. And even then, if you go look, like just go on Airbnb and look, there are a lot of people out there that do not give a crap about what their listing looks like. They're not running a business. Your grandma has her house on there and it's got wicker furniture in her beach condo and it looks like Golden Girls live there. Those people are not competition. So yes, there may be 10,000, but I guarantee you 5,000 of them are half-assing it. And a very small percentage of the market is ever actually professionalizing their management, their listings, and really trying to optimize. So again, I prefer high volume. I don't like the trailblazing thing. Not saying you can't be successful at it, because you could, but it's a lot harder. I like easy. I'm getting old. I like the easy button these days.
Yeah, right. Well, one of my biggest pet peeves is I mean, even touching onto it is seeing like having a $1 million house and they have iPhone pictures and old furniture. It's easy, always one of my biggest pet peeves in this industry. Another one of my biggest pet peeves, even leading onto this and why I value your content, I know a lot of people do, is you are actually doing this and have been doing it for a long time. But there's a lot of, snake oil salesmen out there that are, teaching one thing and either not doing it and have never been successful in it, or they may not, they may have heard somewhere else that this could be successful and they think it's something to, put out there to the community. How do you spot bad, vacation rental advice from these different online influencers out there and know if, what they are actually teaching is of value to you and not just something that they're trying to sell you a course and line their own pockets with?
Well, I think there's a little bit of value in just about everybody. There's certain things you can learn from some people that might be applicable to your business, but certain other things are not. I think I want to see that if I'm taking advice from anybody, I want to see that they own at least 5 properties for at least 5 years, because that's enough time and enough doors for you to have gotten knocked around a little bit, for you to have seen some things. So, there's a lot of people out there. Like I want it. What's your portfolio look like? I don't need to see all of your listings, but I want to know that you are an experienced person. There are plenty of people out there that are really good at spreadsheets that will, tell you what to buy and where, but what do they know? Like, great. I want experience. Spreadsheets do matter. You need to have those, but there's a big culture out there of real estate investors who want to get involved, who want to buy not just short terms, long terms, whatever, boutique hotels, anything you want, but they're letting people who don't own any real estate tell them what to buy, like some people on the internet. And guys, like if somebody isn't doing what they're trying to tell you to do, you do not need to be taking advice from these people. So I just want to see experience.
Right. And that leads into the next part, where one of the main things that I think you have developed, and one of my favorite things I have learned just personally from you is your enemy method, which comes from, tried and true methods of analyzing markets. Could you go a little bit into your enemy method and explain just how you go into a different market or a different area to see how you can optimize your listing or a property that you're analyzing and it perform, at the top of the market? Could you explain that a little bit?
Yeah. So basically all of my ideas and theories are just expanding on common sense a little.
Mm-hmm.
So enemy method is, you've got all of these great data sources like AirDNA and Price Labs to give you the numbers of what other properties are doing around you. But, that's your quantitative data. And that's great. But they don't tell you why a property is doing what it's doing, because not all 4 bedrooms are created equal. Not all 1 bedrooms are created equal. There are things about them that just the numbers can't tell you. So the enemy method is basically finding that qualitative data, those intangible things about why the quantitative data says what it says. So enemy method, very basic. You're going in on Airbnb and Vrbo. So as if you are a guest going to book something, don't use the sources on AirDNA, because that's not what guests are going to see. Go on the actual OTAs and look. And what you're doing is you're looking, let's say you're buying a 4 bedroom. You're looking at the 4 bedrooms in your little area, in your market, to see this is the most basic part, what your guests are going to be presented with when they're looking at your property, what choices they're going to be presented with, and what you can do with your property to make them choose you instead of the other 4 bedrooms. So I like to make a little spreadsheet for this information too. And it's not really numbers, it's just information. So you want to know things like, okay, what does this property have amenities wise that I can add? So do they have a sauna? Do they have a hot tub? Do they have all these things? These are things I can add. I also want to know, is their location better than mine or worse? Do they have a view? There are things about certain amenities about properties that you can't change, that you can't improve. So if they've got a view and you don't, well, you're probably going to have to price yourself lower than them. So they're probably performing at the higher end of that quantitative range that you got from the data sources. So basically, it's just a competitor analysis of comparing your property against the other ones to see where you might fall on that data range that you get from the data sources.
What do you see are some, more common ways that STR investors can boost their underperforming listings, or, see ways that they can, besides matching amenities in the amenities arms race that's kind of going on in some markets, what have you seen that has been a tried and true method to boost your underperforming listing if you have one? I
would say more often than not, it is a pricing problem, because people get in their brains, they come up with what their break-even number is. I need to make X amount per night at X percentage per year to break even. And they will never go below that break-even number. Well, the thing about short-term rentals is they're very seasonal, which is fine. I don't care what I make monthly. I care what I make annually, because you're never going to make any money in January unless you're in like Park City or something. But in beach markets, a lot of the southeastern markets that I invest in, you're not making money in January. I don't care monthly. We're looking annually only. So we'll get into an off season or shoulder season, and they've got this, let's say that I need to make, for a nice round number, $200 a night. And they will not go below that. And then they don't get booked because they think, oh, I'm losing money if I do that. When they don't have to go below 200 every day. They just need to do it for a few days to get a few bookings and get yourself back into that search algorithm, back on that first page. And so then it evens back out. Then you're back above 200 once you start rolling into the high season. And then you're way above it and way above it. So they forget that it's an average, that your average price per night is an average. So you're going to have to go below that sometimes to get to that 200 a night average. So a lot of people get that 200 in their brain and they will never go below that, and they will let their property sit empty because they're like, I'm losing money if I don't, when actually they're losing money by not going lower because, again, you have to go lower and higher to get to that average, and they forget that sometimes.
What are your takes on dynamic pricing, and is it a when you do have a dynamic pricing, is it a set it and forget it type of system, or what are some of your tips for maximizing revenue in maybe in your higher season and things like that?
Yes, you 1000% must use a dynamic pricing tool. I like Price Labs. Beyond Pricing is great. Wheelhouse is great. But you have to use one. Now, nothing is, and I think this is where people don't have enough patience when it comes to real estate investing, and they want everything done for them when it comes to real estate investing. So it is not done for you. It will set limits, upper limits and lower limits for where it thinks you should be able to book. Its goal is to get you the highest price per night possible, but you do still have to keep an eye on that. We look at our pricing daily, and in a lot of our markets, yours may be different. We're about a 5-week out booking time in our Smokies markets. In the beach markets, it's a much higher, longer is the word I'm looking for, a much longer lead time, because people start booking for the summer, their big summer vacations, like in January, February. But for our Smokies, we're looking every day, and we're looking 5 weeks out. And if things are looking a little sparse, we'll drop it lower, even lower than necessarily what Price Labs suggests if we're not seeing those bookings come in. Because at the end of the day, guys, like with everything in real estate, whether it is your price per night on your short-term rentals, or the rent on your long-term rentals, or the price on the property you're trying to sell, the number one problem of why something will go unbooked or not sold is price. So I'm not saying everybody drop your prices to the basement all the time, but there is a price at which everything will sell. And if you are not selling, it's the price. And ways to increase your price, make sure your listing is what it needs to be. Make sure you have really good photos. Bad photos will cost you a lot more in price per night than hiring a good photographer. It can be very small things. So the way you manage your property, is your description good? Is it a big long paragraph with a bunch of black words that nobody's going to read the whole thing? You want it spaced out in bullet points. We call them boom booms. What are your boom booms? And you want to make sure that your listing is giving a lot of good information about the property that your guests need to see. So like, I need to know exactly how many beds there are. Are there 2 beds in 1 bedroom? Because sometimes my kids get scared and they need to be in the room with us. I don't want to see like, welcome to a fairy tale land with Garrett and snuggle up by the fireplace. I don't care about all that. I'm trying to figure out what I need out of this property to book. Don't tell me a story. Tell me what's in the property. So there's a large number of ways to improve your listing without having to like go add a ton of amenities and things. And I think the 2 big mistakes: people aren't patient enough. They expect to get rich within the first 6 months. Guys, your first year is not going to be the best year of your vacation rental. It's just not. Like, listen to what I said earlier. We were making $45,000 on properties that we're making $80,000 on now. Patience. It is a years-long game, not a months-long game. And then also, things are not going to be done. Don't expect any system to do everything for you. Price Labs is awesome, but you have to manage it. You have to manage your systems.
And you mentioned it earlier as well, too, about how real estate, how vacation rentals in particular are. You went on the real estate front to begin with, and then you have a hospitality business in the second part of it. Where do you think the importance of the guest experience on the hospitality side come in, and how can somebody elevate their hospitality for their guests to have a much better experience that they provide? I think a lot of people who might be in the service industry or coming from the service industry feel a little insecure about big fancy things like real estate investing. But if you come from a service background, even if you waited tables or bartended in college, you are going to, all of us, you're going to be good at this just because you are used to dealing with a large volume of personality types on any given day. So you learn a lot of those intangible skills from that. And I think, honestly, the personality type that has the hardest time with short-term rentals is the engineer personality type. Yeah. So it is just like my husband owned a bar in New York when we first started dating. And almost every day he's like, this is just like
it's just like the bar business. It's just like the bar business. And it's just being nice to people. It's being pleasant and not taking things personally if they have a complaint or if they do something disrespectful. Just not taking it personally and just customer service face, customer service voice all the time. Don't ever let them see you crack. Just, keep your customer service face on. And there's a great book, actually, you should probably read that'll articulate it better than me. It's called Unreasonable Hospitality by Will Guidara. He had a really famous restaurant, and hospitality is like the going the extra mile. So service is just doing the bare minimum, but hospitality is going the extra mile. Like one of my agents in our Slack group the other day, she was talking about she had a guest whose car broke down and she was freaking out. She couldn't get it up the driveway. It was in the mountains, and she was like really mean to my agent. And my agent was like, "Oh my gosh, I'm so sorry." Kept her customer service face on. Turns out she was there with her kids. She and her baby had gotten there. Her husband and older kids were coming later, and she didn't have any diapers. She was out of diapers. And so my friend, agent Reagan, she DoorDashed this girl diapers and some formula and some wipes and stuff because she was freaking out, not because of the house. It came across, it comes across to you like, I'm so mad at your house. She wasn't stressed out about that. She was stressed because her baby doesn't have any diapers and she couldn't get out up the driveway. So Reagan DoorDashed her diapers. Like, that's hospitality. Service would just be like, "Oh my gosh, I'm so sorry.
Yeah.
We'll be able to help you, in the morning, get the car out," or whatever. But, and that made such a difference to that mom. She actually was crying like, "Oh my gosh, thank you so much. You just made our life so much easier. You didn't have to do that." So when you really go that extra mile to do something nice for people, it does, not all of them, but it does touch you. When somebody goes out of their way for you, you're like, "Oh wow, thank you." And I think creating that feeling in your short-term rental, whether it's just, a few extra touches like a gift basket or really, really comfortable beds, just, you never exactly know what's going to make that difference to somebody. So just kind of going that extra mile.
Great points. And as somebody that was in the service industry for a long time as well, too, I became very familiar quickly that especially, waiting tables is a little different than this, but 99.9% of the time, it is nothing personal to you. It is something that is going on in their own immediate, life or moment. And every time I've had a guest that complained about something or just, besides fixing, if there's a problem, addressing it, I make it almost like a game to me. Like, how can I turn this around from them having a terrible experience to making this as pleasurable as an experience as they could possibly have and get that to that 5-star review that we're all kind of hoping for too. So anybody that's listening to this, if you do have things that pop up, realize that there's a solution to the problem and it's nothing really personal to you, and you just need to address and see how you can go that extra mile to make their stay even more, as amazing as it could possibly be in the scenario that you're given. A lot of that, empowers, having cleaners that are empowered and other people around you in your team that is, you've built out to make your vacation rental a success, which your team is, one of the most important pieces to it. But having teams, you're going to need operating procedures and you're going to have standard things that, continuously happen at your properties that you need to address. What are some of the most important SOPs, standard operating procedures that you have that help streamline your operations for running so many different vacation rentals that you have?
So anything related to cleaning is going to be probably the most important SOP. So, and for those who don't know what that means, it means standard operating procedure. So anything related to cleaning. We have one of the big things that, and we don't see this very much. I think this is more of like when people are going to markets where they're trying to get a big discount off of everything and just like kind of scam people. I haven't had it happen to me. I get it every now and then, but nothing too bad. But a big thing is to come and like say, "Oh, there's trash everywhere, that it's not clean. There's hairs in the beds and whatever." So we have our cleaners, like they take a quick video of everything and upload it with a timestamp. So we know if anybody comes and says like, "Hey, this house is disgusting," then we have that proof there if we need it, that it was cleaned, it was done well. We've got videos of that. We have standard operating procedures for like if somehow It has not happened in a really long time because just the way that our property management software has improved over the years, but cleaners missing a clean. Sometimes that'll happen. Wires get crossed with calendars and they'll miss a clean. So that's very important. And what we do with the guest when that happens, we send them to dinner. Hey, they're going to come over right now. They're going to clean it up. They're going to get it done. We're going to send you guys to dinner. Here's our favorite restaurant. We're going to call and take care of your bill. And typically that works. So anything related to that, anything related later to people who don't complain about anything while they're there, but then they leave and then they want to complain to try and get a discount. We've got some things in place for that too. But anything cleaning related is going to be your most important process to manage, and pricing, of course.
Obviously, the more you scale, the more, I mean, from day one, you should be trying to implement these type of, SOPs in your system. But the more you scale, they become even more important. And as somebody that has, scaled in the, over the last decade of experience, when should an investor move from one STR to adding on a couple more? Or when have you seen it is, you don't want to bite off more than you can chew. When do you see as the right time for somebody to really, diversify their portfolio or add on another, vacation rental?
I mean, I've seen people buy multiple at one time in multiple markets and be successful and be totally fine, but that's not the easiest thing to do. I would say get your feet wet, get in there for at least 6 months with your first one before you buy your second one. Preferably a year, just so you've been through an entire season so you know what to expect. But after 6 months, you've pretty much got your processes down, and nobody likes to, again, real estate investors are impatient. Everybody wants to make money now. So if you're ready to go after 6 months and you don't hate it, I'd go ahead.
Don't fall into door disease, as Luke called it. The best terms I've heard too. And I really appreciate you for jumping on and giving a lot of valuable insight into this, ever changing market. What are your top 3 tips for new STR investors in 2025? What are some actionable things that they could take going into this year and really, set themselves up for success, even if they don't buy one this year, for maybe next year or anything along those lines?
Okay, number one, there is no best market to invest. There's a best market for you to invest. And the best market for you is the one where you have a competitive edge, which means you know the market. So an area maybe that you grew up going to as a guest. That way you know what your guest avatar is because you are that person and you have been there and you know what tourists are looking for and what they do when they come and what it's important to be close to. There's no spreadsheet that can substitute just local knowledge in the form of having been a tourist in your own market. Number 2, don't buy cheap stuff just because it's cheap, because people forget about CapEx. So I was looking at all of the different best places to invest in short-term rentals lists, and that came out in January because, we're just now in February, so it's fresh on my mind. Not one of them had the same markets on any of them, but a lot of them will throw out these really cheap markets. Like I saw one today. The number 1 best place to invest in short-term rentals in the country is Detroit. Stop. And the reason they said that was because the real estate is super cheap, so the returns are really high across the board. Well, let me tell you what happens when you buy cheap real estate just because it's cheap. And when the returns look really, really good across an entire market, there's a reason for that when the cash flow is really high. And the reason for that is the real estate's cheap because it's not desirable. It's not in a desirable area, not meaning anything other than if it's long-term, that the area is not growing, people aren't moving there. If it's short-term, it's because people don't go there. So for example, if you want to buy a beach house right out here behind me across the street, short-term or not, it's going to cost you a minimum of $10 million. Why? Because these sugar white beaches on the Gulf of Mexico, or whatever we're calling it these days, the Gulf of Margaritaville, it's the crystal blue water. That's valuable. People always want to come here, and that's why it's expensive. So when you're buying property just because it's cheap and it's cheap across the whole board, take a look at that, because you're going to end up, people forget about CapEx and the reason that things are cheap. So I've bought in a super cheap market before on a long term, and same thing, like when things go wrong that force you to have to sell a property that might be completely outside your control. I talked about this story on the Bigger Pockets podcast last week, where we bought something super cheap. The building across the street, after we owned ours for 2 or 3 years, like just completely fell apart. The owner didn't even care anymore. Didn't care if anybody was paying rent. Eventually it was condemned by the city because it went into such disrepair. And then we ended up being forced to sell because just the return on our energy was no longer there. The crime's coming across the street to us. Now we have to sell the property because it's just, we're tired of redoing everything and it's not getting any better. And the police don't care about landlord problems. So then we were forced to sell. Well, we bought in a super cheap area that doesn't really appreciate. The returns look great across the board. Anything you look at in that market looks great. Well, the problem is now that we're forced to sell, we've dumped all this money in this thing, rehabbing it. It's not worth any more than what we paid. As a matter of fact, we had to sell it for less. So people forget about the CapEx piece when you're buying super cheap stuff. The CapEx is what will get you when you're buying in undesirable areas like that. So keep that in mind. So I've got, don't buy cheap stuff just because it's cheap. Buy where you know. And the third, don't over leverage yourself. I think one of the biggest things that I've seen people who have bought property and failed is by over leveraging. And I'm talking like $500,000 HELOCs. Guys, that's an entire extra mortgage that they're not factoring into the expenses of the property. So in order to be successful, you have to buy right, you have to finance right, and you have to manage right. And financing right means knowing exactly how much this property is going to cost you every month. And if you're getting a gigantic HELOC, and I mean, I don't know what the mortgage payment would be on 500, but when you've got a property, let me back up and give you examples. So anytime somebody's come to me in the last probably 2 or 3 years and said, hey, I'm not making money, I'm losing money, can you look at my property? A lot of times their gross income looks great. What they paid for the property looks great. But what doesn't look great is that, but I think both times this has happened, it's been exactly a $500,000 HELOC. Well, that's why you're not making money, guys, because you took out this gigantic HELOC. So careful not to over leverage yourself, especially if you're buying multiple properties. You don't want to get yourself in a situation where if one of them dies or doesn't do well or is a dog, that it doesn't knock down the rest of your portfolio. So, and eventually you will get a dog. If you are in real estate investing long enough, one is going to happen. It's not going to necessarily be your fault. Just not everything performs all the time. Your number will be up at some point. And if you get one of those and you've created this house of cards, you don't want that one to knock down everything else you got. So that was my last one.
Awesome. I think those are all extremely actionable and things that people can really, set themselves up for success before they even buy the property or picking, a random market out there. I really appreciate you coming on and sharing all these tips that are going to be super helpful to current STR investors and, future ones, hopefully. Where can people buy your new book, Smarter Short-Term Rentals? And then where can they follow you for some more insights?
Yes, so you can buy my book anywhere books are sold, but the best place to get it is at the Bigger Pockets bookstore. So biggerpockets.com/smarterstr. And you can follow me at the Short Term Shop on Instagram if you want to follow the brand, or if you want to follow Avery the Investor and see what I do every day. It's at the Avery Carl.
Awesome. And it's an amazing follow. I guarantee you will learn more than you even expect to over there. I appreciate everybody for tuning in today, and for Avery for, taking time out of her busy schedule to educate everyone out there. Please go buy the book. We'll put all the links in the description below, and we look forward to y'all in the next one.